Hey guys, so how was your trading week? We had a lot of volatility last week. We had crazy movements that came in last week, especially on gold. And let's see what opportunities we have this week. And for the other positions we're in, let's see how we can manage it. So without wasting so much time, let's dive straight into it. So the first pair we're looking at is a DXY, and we've been analyzing the DXY every time, and it's always the first pair we analyze when doing the weekly breakdown or the weekly focus. And the reason we do this is because if you have a directional bias spot on the DXY, it makes it very easy for you during the week to capitalize on certain moves. So if you look here on the daily time frame, we said this last week as well, we had prices move to the upside, putting in highs and lows, or higher highs and higher lows, and eventually we had a breach or a break of this uptrend. We had prices moving down. We had this correction, and we had prices move to the downside again. So when you look at this from the daily time frame, it's okay to say prices is moving to the downside, but a very big question is, how far can this movement go, or how far can these sellers push the market to the downside? And that's why it's very important for you to do your weekly focus, because it prepares you for the week ahead. And when you prepare for the week ahead, it's very easy for you to capitalize on big moves or even little moves as well. So we had prices moving to the downside, we had a correction, and then we had prices move to the downside again. A very important thing is the move to the downside was very impulsive. So when you compare this move to this other move, you had a very impulsive move. So it tells you the sellers came in really hard compared to the previous move. So compared to this move as well was very impulsive. So going off of price action, it's very simple for us to say we had a move to the downside, we had a correction. So we've had this impulsive move to the downside, and now we're waiting for another correction to come in before the sellers move to the downside or continue going to the upside. So basically, when you look at the DXY as of what's happening right now, let's zoom in on the daily time frame. When we zoom in on the daily time frame, we look at a candle like this one, and the way this candle forms is very important because we had this massive move to the downside telling us the sellers were actually in, but on Friday prices closed like this. So it's telling you that in as much as the sellers came in, there was a rejection from the buyers trying to take prices again to the upside. Now, how can we use this information to our advantage? The first thing is, when price moved to the downside, we had a correction. We've had a rejection here from the buyers. It means it's an early sign that the buyers might come in for us to get that correction. So how do we prepare ourselves for the week ahead? Let's look at the possible scenarios that can come in. And for us to do this, we'll probably have to look at other time frames as well. So let's look at other time frames. We look at the 8-hour time frame, for example. You had a series of lower lows, and then a correction came in. We had an impulsive move to the downside. So we're expecting a similar move like this where the buyers come in. So we're expecting price to do something like this, and then a break, and then a move to the downside. So this is the first possible scenario that can come in. We'll get a pullback. So when we get a pullback, we need to watch out for certain areas, because psychological numbers are very big for me, because we expect a rejection or a reaction around the psychological numbers. So if the buyers decide to come in, we might have prices pulled back to areas like this, and you will have to watch this psychological number, because a rejection can happen here and you have prices move to the downside. Now, if prices go past the psychological number, we could have prices break to the upside. We'll get a test of the psychological number, and then prices continue to the upside. Now, these are all possible scenarios, and we need to prepare ourselves for every possible scenario that might happen next week. And once you already have these scenarios prepared and planned out, it becomes very easy for you to capitalize on moves when they unfold or when they happen during the week ahead. So the first possible scenario, I'll just go over this again. We could have prices move up as a correction set to this psychological number, and then we get a move to the downside. Let's look at it on the 4-hour time frame. So first possible move, a correction to the psychological number, then we get prices to the downside. The next possible move, we could get prices. Let's look at the next possible move. So we could get prices move to this psychological number, and then it goes through the psychological number. So we have prices go through, we get a test of this area, and we see prices continue to the upside. That's the second possibility. So again, the first one, we get prices to the psychological number, we get a rejection, and then we get prices to the downside. The second one, we get prices go past the psychological number, we get a test of it, and then we see prices move to the upside. That's another possibility. So we need to get prepared for each of these scenarios. Once it happens, it's going to give us a lot of trading opportunities on other currency pairs or on other asset classes that we're looking at. Let's keep it simple. Try not to complicate your analysis. When you keep your analysis simple, everything is free, like it is flowing. There is no complication, there is no headache for you during the week ahead. You already know what you're looking for, and so when it happens, you push that button to buy or to sell, and you're not even scared. So if there is just, say, a couple of opportunities you're looking at, if price goes through the psychological number, you wait for a test, and then you see prices move to the upside, or you get prices move to the psychological number, you get a rejection. A third possibility could be prices just continuing to the downside. So we could get prices continuing to the downside, and that is the third possibility. This here was the first, and this was the second. So you need to prepare for all these possible scenarios. When this happens, then it becomes easy for us to capitalize on it. Now, if prices continue to the upside, then it's easy for us to see sales on other asset classes like US30, NAS100, S&P500, oil, and gold, GBPUSD as well, EURUSD and stuff like that. And if prices move to the downside, then we're expecting the opposite. Say on US30, we're expecting prices to go to the upside, gold to the upside, NAS to the upside, S&P to the upside, USD JPY to the downside. Alright, so let's look at other currency pairs, or let's look at other asset classes and see the opportunities we have for next week. Alright, so let's look at US30. So looking at US30, I think it's really easy and it's not as complicated as it was last week, because when price plays out, it gives you a clearer picture as to what is happening, and you see things better once you have more price action. So we had prices move to the upside, and then we had a breach of this uptrend, and we had prices doing this correction, and then we had a massive drop to the downside. When you look at this, say from the hourly time frame and the 4-hour time frame and even the 8-hour time frame, it gives you a clearer picture as to what is happening. So on the 8-hour time frame, for example, we had a breach of this uptrend, and we had this correction that came in, then we had a move to the downside, and now we've had another correction coming in. When you look on the 4-hour time frame, it's clearer, and when you look on the hourly time frame, it's even clearer. So my take on US30 will be for us to wait for this correction to complete. Then once we get a violation of this correction, we could see prices move to the downside. So to keep it simple, you look on the hourly time frame, we had this correction coming in, we had a breach of it to the downside, and the same thing is happening right here. We've had a correction to the upside. So all we're waiting for right now is for prices to breach this say pull back, give us a test, and then we'll see prices move to the downside. It's that simple. It's the same thing happening on the 4-hour time frame. All we're waiting for is for this correction to complete. On the 4-hour time frame, we have the correction coming in as well. So once this correction came in, we had to move to the downside. We're also waiting for another correction. We get the move out, and then we see prices go to the downside. Now, if this doesn't happen, then we might see prices move to the upside. It might be difficult for me to get in on the buy here, simply because I have this psychological number here that might be difficult for me to get a good risk to reward. So I'm more inclined to the sells on this, depending on what happens on the DXY as well. So if the DXY continues, if the DXY gives me this correction, if the DXY gives me this correction to the upside, or even a correction to just say areas like 103, this simple move to 103 can cause a very massive move on US30 or on indices or on other currency pairs. So all you need to see is the DXY moving to the upside, and it could be a very tiny move, say from here all the way to 103, and you'll probably see this drop coming in on US30. So that's my bias on US30. I'm expecting prices to drop to the downside simply because we had a violation of this uptrend. We had a move to the downside, we had a correction, a massive drop. We're having a correction happening right now, and I'm expecting another drop to the downside. So that's it for US30. Alright, let's look at NAS100. So NAS100, US30 and S&P500, they all have a similar move happening right now. And if we look at NAS100 from the daily time frame, we've had this bullish run. But when we look at the current price action, like right here, there is that difficulty for price to move to the upside. And because there's this difficulty for price to move to the upside, we need to scale down, say, to the 8-hour time frame, the 4-hour time frame, and the hourly time frame, and break down this piece of price action right here. So let's move, say, to the 4-hour time frame. On the 4-hour time frame, we had prices moving to the upside. We're using the most recent price action because if we have to take, say, a position next week, the recent price action is going to help us make a quick decision. But we understand what has been happening because we've been breaking down this chart from previous weeks as well. So price has been moving to the upside and giving us this correction. We had to move to the upside, we had another correction, but then there was this difficulty for price to go past this point. And because price found it difficult to go past areas like this, it's a major concern for me. And the reason is, I asked a simple question. If you've been moving up and pulling back, you move up and pull back, why was it difficult for you to go past this point? So it's a concern for me. Now, when I add, say, a trend line on this, just to have this visual representation as to what's happening, when you put a trend line like this, it makes it much better because it tells us at this point, this move to the upside, the move to the upside seems to be violated. When you look at this piece of price action on the hourly time frame, it tells you a lot, and I'm not going to go into details on everything, but already at this point, it was a concern already as to what might likely happen if prices move to the upside, and that's why we saw this difficulty right here. But what we can do with this piece of information is, now we've had prices break out again. So all we wait for is, say, a pullback or a correction, and for prices to give us, say, a good discount, and then we can go in with another sell. So if I had to take a sell on this next week, I need prices to pull back up to areas like that. I'll put my stop loss right here, and we can take this, say, to areas like this or to areas like this. It just depends on you, your risk appetite and everything. But already this right here is a 1:3 for prices to drop just to areas like this, to test this area right here. That's a 1:3, and it's massive. It's a lot of profits you can make from that. But this also depends on what price is going to do in the DXY. Now, if this doesn't happen, if these sales don't come in, it's very possible for us to see price fade around this area or find it difficult. Then you get the buyers stepping in again. So you need to prepare yourself for both opportunities. You need to prepare yourself for both possibilities. And once you see or once you spot something, don't hesitate. You just go in because you've done your analysis already during the weekend. You've prepared during the weekend and you're just waiting for this to happen. All right, let's look at other pairs. Okay, when we look at the S&P 500, now we've had a similar move as I told you. NAS100, S&P 500, US30, they all have a similar move happening right now, and all we see is prices moving to the upside. But when you look on lower time frames, for example, I'm just going to move straight to the 4-hour time frame. So on the 4-hour time frame, we're looking at this closely. When you put say your trend line right here, we had this area. So I had this trend line, say from here. I had this trend line like so, and I was watching this, and we had prices break, and then we had prices move back in. You had a tap, you had prices move in, then you had prices violating this trend line, and we've had prices trading outside this trend line, which for me is a major concern. Yes, we had prices go past this area right here. I'm still not convinced with the move on the S&P 500, and I believe there's a possibility for the S&P 500 to drop to the downside, simply because the trend line doesn't seem to hold as a proper trend line should do, because you expect prices to bounce off of this area and make new highs. But here we had prices move to the downside, then we had this price trade outside, and then the massive move to the upside, and sellers reacted really quick, and then they brought prices back to the downside, and then a break of this trend line. So for me, I think we'll have some sellers coming in. All we need is a move to the upside to give us a good price from the pullback. Then we can look for selling opportunities on this as well. So if I had to go in with a sell on this, I'll wait for prices to come back, say to areas like so. We must stop around this point, and we're looking at what 1:3. If prices can get say good pullback to areas like that, if prices can pull back to areas like this, we can get a 1:3 from this. Like, it's really simple. It's not that complicated. So when you compare this with what is happening on the NAS, we're looking at the same thing. If we can get say a pullback, then we look for those selling opportunities, like right here, and you just target this recent area right here. That's a 1:3, or you can get in here. That's a 1:3, and if it goes a little bit higher, that's almost a 1:4. But we're looking at this, you have like a 1:3 on the NAS. On NAS, you have a similar thing on the S&P 500, and it's just simple. Once you see prices moving on the DXY, say to the upside, and it could be a simple move, say prices moving from here to 103, expect the sellers to come in on say S&P 500, NAS100, US30, gold, and those other pairs. Alright, so when you look at US oil from the daily time frame, we've had prices moving to the upside, and when you look, say, put in a trend line, you've had prices moving like so. Each time price touches the trend line, we have a move to the upside. Here you had a little bridge of it, but then you had prices move again to the upside. Price touch, you had prices move to the upside. So when you look at US oil from a daily time frame, price has approached again this trend line. So there's a high possibility that prices will move to the upside. when you step down to lower time frames, for example the 4-hour and the 1-hour time frame, like so, we've had prices move to the upside, we had a breach of it, we had a pullback, and then we had sellers coming in. So right now on the 4-hour time frame, when you look at US oil, there's that difficulty for price to go past these areas. And for me, when you look on the daily time frame, knowing that price is actually touching this area on the daily time frame, and it might come down a little bit more, but there's a high possibility that prices might bounce off of this area to the upside. So on the 4-hour time frame, we see this difficulty for price to go past this point right here. So if I had to trade US oil during the coming week, I'll wait and see if the DXY is dropping to the downside. So we'll look at, say, option number 3. If the DXY had to move to the downside, that's something I'll be interested in. Or option number 1, if the DXY moves to the upside and then gets a rejection around this point and has to drop, then I'll look at US oil for a potential or a possible move to the upside, a pullback giving us that good discount, and then a move to the upside. And it's that simple. Once you have a breakdown on the DXY, once you understand what's happening on the DXY or what is most likely going to happen on the DXY, it becomes easy when you look at other pairs and you just prepare depending on what's happening on that pair. Alright, let's look at one more pair and the last one. Alright, let's look at gold, and this is the last pair we're analyzing for today. So with gold, there's not a lot you can do now, and it's quite difficult for you to hop in on this buys on gold. So if you didn't get in on this trade when prices was here or here, it might be very difficult for you to get in now. And the reason I'm saying so, we'll just stay for gold, we'll stay on the daily time frame. There's no need for us to go on lower time frames, and I'll tell you why. Because gold has been on this massive bullish run, and you know the way price moves, every time you have, say, a massive move to the upside, you must expect a correction to come in. So every person looking at gold and thinking, oh, I need to go in for a buy, I might tell you, like, just be a little bit cautious, because you might have prices correcting before you see another move to the upside. So you need to be a little bit careful with gold, and that's why I'm not looking for any opportunities on gold right now. I think what is most likely going to happen on gold is a correction to the downside, and that is because we're looking at the DXY and we're looking at this possibility for prices to correct to the upside, or maybe just correct to 103 to this area. And if that happens, you could most likely get a correction on gold. So with gold, I'm not touching it. I'm just going to stand aside and watch it, and I'll look at other currencies, like I'll look at other assets like US30, NAS100, S&P500, and USOIL. So I'll look for trading opportunities on these, and just depending on what the DXY does, and then I'll look for opportunities on these other asset classes. And don't forget to use the comment section. Tell me what pairs you're looking at, or what pairs you're having difficulties with, and what pairs you'd like me to analyze, and we can have a look at that during next week's market focus. Alright guys, don't forget, hit the like and subscribe button, and see you during the next one. Bye for now.